All right, this is my goal for February 2024, and I hope to accomplish this without fail, Lord willing. I'm going to be practicing a moving average strategy that I came up with, and hopefully it will work. But the moving average strategy will involve other variables to strengthen the trade setup, like Fibonacci and trendline breaks. I'm going to use multiple tick charts for the futures contracts. So I will be using a 10,000 tick chart and a 1,000 tick chart, or a 2,000, but one of those two, a larger and a smaller time chart. So whatever direction the moving averages and price is going on the 10,000 tick chart, I will follow that direction for a bull trade or a short trade. So price must be above the 50 and the 20 EMA, exponential moving averages, in order to find a trade setup. Okay, so first example for a bullish trade opportunity right here. On the left, you see the 10,000 tick chart. On the right, you see the 1,000 tick chart. We're going to zoom in and look closer at this, but quickly on the left side, you can see right here on the bottom, you have the 20 crossing up over the 50, and the 20 and the 50 are going up. And this line right here is the 200 moving average, which is not really relevant, but we're going to have it there anyway. But price, as you can see in this circle, is above the 20 and the 50. And the rules are that price must be above the 20 and the 50. And one of the rules is that the 20 has to be above the 50. So over here on the bottom left, you see that the 20 is below the 50. This is a no trade zone. As soon as price crosses the moving averages, you wait until the 20 crosses the 50. Now they can be below the 200. That just gives me an idea where we're at. So the real rule is price must be above the 20 and 50 exponential moving average, and the 20 must be above the 50. Okay, then we have the conditions that are ready for a trade trigger setup. Okay, and on the right, we just from a distance we can see like one of the triggers is a trend line break. The trend line comes down this way. We're going to zoom in and look real close at this, but that's what's going on the left side is that same area in the circle, but on a different smaller time chart. And we're going to zoom in and look at that right now. But let's go back over the 10,000 tick chart. We're looking for weakness. Once price is above the 20 and the 50 exponential moving averages, and once the 20 is above the 50, the conditions to look for the smaller time charts for trade setups is the right time. Okay, so now we go down in the smaller time charts and we see a red candle developing here. We go down on the smaller time charts. We see that red candle developing right here on the 1,000 tick chart. And we're waiting for Fibonacci pullback. Here's 50% pullback right here to this area. It also happens to be coordinated with a trend line break. And price is going to fall below, a lot of the times will fall below the 20 and the 50 on the 1,000. It will oftentimes fall below, but you don't want it to fall below the 200. If it falls below the 200 on the 1,000 tick chart, it's more than likely below the 20 moving average on the 10,000. You do not want price to fall below. See, here's the 20, and price is below the 20 on this side, on the left side, down bottom. You don't want to take any trades. And even when it closes above the 20 right here, and on this green candle right here, you don't want to take a trade because the 20 is below the 50. So when everything's right, the conditions are right. Once again, on the 10,000 tick chart, we're looking for weakness. We go to the next time chart, we zoom in on it, and we look for a trend break, a trend line break at a Fibonacci support level. It must stay above the 200 moving average, but oftentimes will break the 50 and the 20 on the 1,000 tick chart. Sometimes it won't, like this area over here, it didn't break both moving averages, but oftentimes it's going to break them both for a deep pullback. And the setup is once it crosses, bounces off of a Fibonacci level and breaks a trend line, there is your area to enter the trade right there. Okay. Now here's another example of the 10,000 tick chart. Price is above right here in this red candle is above the moving averages properly. And we go to the smaller time chart to look for weakness. Here in the red box is that same red candle coming down. Okay. And we look for Fibonacci levels, which I didn't draw on this, but you certainly want to add to the strength of the trade setup. If you have Fibonacci drawn, more than likely we could have drawn Fibonacci from some pivot down in this area on the bottom left and pulled it up to the top and drawn it down. It should be 50, 60%. You can tell by looking at it. But you don't want to take a trade down in this area, by the way. We're going to get to that in a minute. This area down here is a no trade zone. We're talking about this candle right up here. Right up here. All right? So some Fibonacci level from some pivots down here would probably fit. But the point is there's an excellent trend line trade taking place here. And as soon as price breaks the trend line, we enter the trade, stop loss goes under the pivot, and we try for 2 to 1. If we can't get 2 to 1 and we get 1 to 1, that's great. And otherwise, if it doesn't go up very far, move your stop loss up to break even and break even. You don't want to lose anything on these. Very rarely will it come down and stop you out. And if it does, there's another setup coming off. As long as it doesn't break below the 20, it should bounce. Now we're going to talk about when it does break below on the next slide. But right now on this bounce right here, this little green candle is enough to get some kind of profit. It's not much in this case, but it is profitable nonetheless. Now, what happens when it breaks below? This red candle right here starts to break below. You're looking for a trend line break, but then it breaks below the 200. You're drawing your trend line down this way. But it just keeps going, and you don't even try to take this trade down here. You don't take this trade. Maybe it'll work, maybe it won't, but it's breaking our rules. We don't trade if it goes below. We wait until it crosses back up the 20 exponential moving average, and you want price to always be on this side. So any red pullback is our opportunity. Any fall below the 20 is a no trade zone. So here's a no trade zone. You can see it right here on the 10,000 tick. You can see it right here on the 1,000 tick. And then when we start to see price break above the moving averages, it looks like this on the 10,000 tick chart. When it breaks above, you can see price closing above the 20 exponential moving average on the left side on the 10,000 tick chart. Closes above. And that's what it looks like over here when it closes above. We wait for that. Now, you can try to trade it here if you want. There's no trend line break. And you can try to trade it based on head and shoulders pattern, W pattern, 2 try-sell patterns. There's other patterns other than the trend line break that you can incorporate into this. You can do momentum trades, consolidation breakout trades. So you'll just have to figure out what you can add to the moving average strategy. You can combine this with other trade setups. But this slide is talking about trend line breaks mostly at Fibonacci levels. But there are other ways of trading it. So over on the right side of this slide, you see that same breakout, and you see what we're looking for is price to go up and show weakness. So price comes up over here like it does over here. Once it closes on the left side, we're looking for it to create red candles. And so anytime it goes up and comes back down, goes up and comes back down, since we know it's over here, it's closing above the 20 and everything's expanding and moving upward, we have a high probability that this trend line is going to be broken to the upside. And that's why we use the trend line breaks only in the conditions that are met according to the 10,000 tick chart, where price has to be above the 20 and the 50 EMA, and they have to be going in the proper order. And it's even better if they're above the 200 moving average. So let's continue to look here. So we stay long until we see weakness, and we look for another opportunity, another red candle. Here's that same red candle and we draw Fibonacci's from some pivot down below, and we try to match it up with one of the Fibonacci levels, and we look for a trend line break. Sometimes the trend will not bounce on the 200. Sometimes it will break and do another leg down, and therefore we get stopped out. We don't trade below. We wait for it to, if it does, like this right here, when it was underneath, if it does stay under for a while, we wait for it to eventually come back up. It may create beautiful support levels and patterns that are so cup with handle and just textbook, but we wait. We wait for it to confirm, okay? In this strategy, you wait for it to confirm up. You wait for it to confirm up. And if it breaks down below, then you may just have to wait for a while. But as long as that 200, as long as that 20 moving average and the 50 are still apart from one another, heading upward. See, once this 20 were to come down again, if the 20 were to start to come down and then you get this choppy action, if it stays like this for a long time, and over here it doesn't immediately go up and it just comes down, and then you got the 20 and zigzagging all over the place, then you don't trade that. You don't trade that. It may wiggle a little bit and throw you out, and you just have to say this is not working and wait for it to behave properly. Okay, so this is behaving properly. We see weakness. We see weakness. It's behaving properly on the 10,000, so we take it on the 1,000 trend line break at a Fibonacci level or at the 200 moving average support. And we go as far up as we can. Now, remember, if price closes below the 20 moving average on the 10,000 tick chart, it's going to look like this on the 1,000 tick chart. That's under the 200. We don't take trades for the long side. Do not go long. And the same thing applies for the short if it was reverse. If the 20 was under the 50 and they were under the 200 and everything was flipped upside down and going down, then we would break the trend line going up. We'd break the trend line as it comes back down this way. Everything would be reversed. Same rules, just reversed. All right, so that is the moving average strategy for the month of February 2024. That's the only strategy I'm going to be trading for the long side and for the short side. And by the grace of God, I hope it works. Peace.